Hi everyone, welcome to the ABC Investing channel. My name is Aaron Chua, and just a quick background, I'm a businessman with 10 years experience in the real estate industry. Today we'll be talking about a topic I get often from new and even seasoned investors, and that is how to make money with pre-selling properties. When investing in real estate, you will normally be met with two kinds of properties: ready for occupancies or RFOs and pre-selling properties. And people always ask me which one is better or which one they should invest in. My answer to that is it will not only depend on your budget, but also be based on your situation. So I decided to make this video on the advantages of pre-selling properties and how you make money through them to help you understand and decide if this is the right investment for you. Hey there! Are you new to the channel? Do you want to learn more about the ABCs of investing? Then click the like and subscribe button and hit the bell icon to get notified with our future videos. Number 1. Lowest entry point. Now, this can be called by many different names. The launch price, the first release, the introductory price, but they all mean the same thing, which is the lowest entry point by the developer. The number one advantage of pre-selling properties is that it allows you to come in at the lowest entry point of the developer. This means that you are at the starting point of the upward trajectory of the property and are able to take advantage of the appreciation as it's being built over time. Let's look at some historical data of the gains that was made by investing during the launch period and the market value after turnover. From the graph, you can see that the property grew by 91% at about 15% year over year. So imagine, when you get the keys to your property, which you bought 5 years ago, it's now worth almost double what you invested. So we make money through pre-selling properties by going in at the lowest entry point and maximizing appreciation. Number 2, hedging against inflation through spread investment terms. According to Investopedia.com, inflation is the rate of increase in prices for goods and services in an economy over a set period of time. This means that as time passes, when the prices of goods rise, each unit of peso has less purchasing power than before. Because pre-selling properties are sold prior to their completion, developers offer spread investment terms over a set time period until the turnover date. Investors are able to make a portion of the payment yearly, which allow them to take advantage of the devaluation of the peso. Here's an example to explain this better. We were able to hedge against inflation in two ways. The first is by locking in the lowest entry point during the launch period, and the second is by allowing the property to increase in value over time whilst having the payments, even with the amount remaining the same, decrease in value as the purchasing power of the peso devalues over time. So, that is how we make money by hedging against inflation through investing in pre-selling properties. We'll be making a separate video that will be explaining how inflation affects real estate. Number 3, leverage with other people's money. Leverage is when you use an instrument, normally debt, to purchase an investment that is larger than your initial equity. When making investments, such as in stocks or bonds, unless in specific circumstances like margin trading, the investment ratio is 1:1. This means that 1 peso will get you an equivalent of 1 peso worth of stock. However, in real estate, it is the norm to have banks finance the majority of the transaction, at around 80%. This means that you are at an investment ratio of 1:4, 20% of your personal equity and 80% being bank finance. We have a second advantage with pre-selling properties in that it allows us to invest in a property with only a small upfront percentage, the initial investment, and a yearly portion that can range from around 10 to 30%, while still allowing us to reap the benefits of appreciation on the total amount of the property. So, what does this mean for us? It means that not only were we able to increase our buying ratio, allowing us to invest in bigger investments with a smaller equity, but we were able to effectively leverage other people's money. For pre-selling properties, we were able to leverage the developer's money by having the developer fund and finish the project with only a small portion of our investment paid upfront. Even better, when the project is finished, there is always the option to leverage the bank's money, who are willing to step in to fund the rest. A small disclaimer, leverage works both ways. So when following this strategy, please practice responsible investing. Number 4, choice pick in units. Now this topic is very intuitive, so we won't be going into much detail about this. But essentially, by going in at the pre-selling stage, we're able to choose the best units, whether it's the penthouse, the amenity views, the sunrise views, etc. Now it has been shown that time and again, the best units provide a premium, whether it's a higher rental rate, a higher selling price, or just an easier access to the market. Now we're able to make money by taking advantage of this premium to achieve a higher return on our investment. Number 5, widest refinancing spread. Now a quick disclaimer, as of the production of this video, November 2020, this does not apply to foreigners. This is strictly for Filipino citizens. With that being said, let's define and discuss. Let's first define refinancing. According to Investopedia.com, refinancing in general is a popular process for replacing an existing mortgage with a new one that typically extends more favorable terms to the borrower. Now, the normal procedure with banks is that they finance the remaining balance of the launch price. In this case, the 10 million pesos. This is because these are the documents that we provided them during the pre-selling period. But the appreciation of the property is still locked into the unit after the turnover. Now, usually, the appreciation can only be unlocked if you sell the property. However, with refinancing, it allows us to unlock the value of the appreciation of the unit while still maintaining the unit ownership. Now, what are the benefits to refinancing? Well, it allows us to access the funds as well as the appreciation that was locked into the unit without the need to sell the property. Thus, we maintain the unit ownership. Since we didn't sell the property, the funds that we have access to will not be as heavily taxed as compared to if we sold the property. So to summarize, we're able to access the funds as well as the appreciation of the unit while maintaining the unit ownership, allowing it to continue to appreciate into the future, and we minimize the taxes on the funds we receive. A word of caution, when doing refinancing, please practice responsible investing and consult your financial advisors so you are also aware of the risks. Those are the 5 ways to make money with pre-selling properties. If you learned something new, please share this video with your family and friends. If you'd like to know more about how to make money with pre-selling properties, please leave a comment below. I'd love to hear from you.